Now, last time we talked about reversal chart patterns, and I explained the double top, head and shoulders, the wedges, and the double bottom, right? As reversal patterns. So today we should be looking into continuation patterns. Now, what are continuation chart patterns? Continuation chart patterns are specific patterns on the charts that when they form, you expect price to continue the initial trend. Continuation patterns are specific chart patterns on the charts that when they form, you expect price to continue a particular trend. Now, let's start with the falling wedge again. Remember, we talked about the falling wedge as a reversal pattern. And how does it work as a reversal pattern? Reversal pattern, if price is coming in a downtrend, and we start seeing the falling wedge form, that is, we start seeing price forming some kind of downward slope like this. We expect price to break out to the upside, retests, and start buying. So this is a reversal pattern, and it is the falling wedge, right? This is a reversal pattern, and it is a falling wedge. If it is coming from a downtrend, it has to reverse and start going up. This is the falling wedge. Now, falling wedge as a continuation pattern, the same chart pattern, but as a continuation pattern. This time around, price is coming from an uptrend. Yes, price is coming from an uptrend. Then it starts forming the same downward slope. It starts forming that same downward slope, the same falling wedge. But this time, it is coming from an uptrend. Remember, have this at the back of your mind. Every falling wedge pattern breaks out to the upside, right? So if it is coming from a downtrend, it has to break out to the upside, causing what? A total reversal from that downtrend to a new uptrend. Now, if it is coming from an uptrend and you start seeing the falling wedge form like this, you already have it at the back of your mind that the falling wedge pattern is going to break out to what? Is going to break out to the upside, right? You already have it at the back of your mind that the falling wedge pattern is going to break out to the upside. Sorry, let me just make it a little bit nice. Although this now you see it on the textbook, you might see it very. This now you see it on the lecture, you might see it very, very rough. So the falling wedge pattern is going to break out to the upside, right? So we expect it to break out to the upside, retest. That is where you enter and buy. So you can see it was in an uptrend. The falling wedge formed, price continued going up. So this is the simple falling wedge pattern as a continuation pattern. Now, please, there is nothing to complicate in this particular chart patterns. This is one of the most simplest form of trading to get one of the best trading results. Yeah, it's a very, very simple way to get one of the best trading results. You don't need to start looking for something that is not there. It's just as simple as it is. You see falling wedge form, you draw your lines to accurately get it. When you get it, expect it to break out to the upside. You don't engage until the breakout happens. When the breakout finally happens, you wait for a retest and then you buy. It is that simple. I know some good traders that have built an entire trading career, successful trading career, trading just the wedges. I don't even mean they are trading the entire chart pattern like that and shoulder. No, just the wedges, rising and falling wedges. That's all. Let's continue. So after the falling wedge as a continuation pattern, we have what we call the bullish rectangle. The bullish rectangle. I think that's happening on gold today, and I failed to see it. So let's see. The bullish rectangle comes from an uptrend. And after coming from an uptrend, price starts consolidating sideways like this. When you see price form this rectangle like this, it is said to be what? It is said to be called the bullish rectangle. And what do we expect price to do in this case? The bullish rectangle, we expect price to break out to the upside as well. The good thing about chart patterns, especially these ones, and continuation and reversal patterns, is that we expect price to break out to the upside. We don't engage until we get what? A retest. And when we see a retest, we buy from there. Our stop loss below this rectangle here, below here, and take profits. Remember, you can use your price range tool to measure from this level to this level, or you target specific areas above, maybe a resistance point above. The good thing about all these patterns is that we expect price to break out and retest, which means since this particular pattern that is forming now, we've seen it before multiple times on our charts, and it breaks out to the upside. And it breaks out to the upside before retesting, we already know that price needs to break out to the upside, which means if price should break out to the downside instead of up, we don't engage. It's a simple plan. It's not a complicated or sophisticated what's it called, strategy whereby where you see price break out to the downside, you start looking for possible confirmation again that should give you reason to engage the market there. This one is once you're expecting a chart pattern to break out to a particular side and it doesn't, all you have to do is you leave it and you look for you look for another pair, or you look for another opportunity. Simple. You don't complicate things. That way, you are not going to lose too much, and at the same time, you are going to maximize profit. Then the next one is the bullish pennants. Now, the bullish pennant is a little bit confusing in this case, right? The bullish pennant is a little bit confusing, which is why I'm going to talk about it. Now, the bullish pennant sometimes is mistaken for the wedges, but this is it about the bullish pennants. Although this bullish pennant rarely forms on the chart anyway, but here it is. When price is coming from an uptrend and it starts forming an upward slope, it's coming from an uptrend and it starts forming an upward slope like this. Now, the mistake a lot of people do make here is this. They do mistake this bullish pennant, they do mistake it for a rising wedge. And they both have different logic on this uptrend. Now, a rising wedge coming from an uptrend, needs to break out below. Why? The rising wedge, whether it's coming from uptrend or downtrend, we expect a rising wedge to break out below. Falling wedge is breaking above, rising wedge is breaking out below. So if a rising wedge is coming from an uptrend, it is a reversal pattern, and we expect it to break out below. Right? Well, this bullish pennant is known for having an upward slope, but at the same time, the consolidation leads to a total or narrower end than the wedges. The wedges end before breakout could be something spacious like this, But when it comes to the pennants, you rarely see it open like that. It's mostly closed. Sometimes you can even get a perfect sideways rectangle like this from a pennant, where the edges kind of like close together or a little bit closer, something like this. This is a pennant. Why when you see price move this way, this is a wedge. Now it's tricky and it's kind of like hard sometimes to differentiate both of them, but understand that a pennant has a narrower end, mostly a closed end like this. And when you see a pennant like this, do not expect price to break out to the downside like the wedges. You expect price to break out to the upside. It's a continuation pattern. It's what? It's a continuation pattern. When you see it like this, you expect price to break out to the upside and price should continue going up. It's a continuation pattern. Now, the rising wedge. Hang on. Now, the rising wedge as a continuation pattern. Remember, have it at the back of your mind that the logic behind the rising wedge is that it has to break out below, not above, below. So if it is coming from an uptrend and breaks out below, it becomes a reversal pattern. But if it is coming from a downtrend like this, you start seeing the rising wedge form. You start seeing the rising wedge form. I'm just trying to like draw it very well. So if it is coming from a downtrend and you start seeing the rising wedge form like this, we expect price to break out to the downside to continue this trend. This is a bullish pennant. Let me write it down so you don't get confused. This is a bullish pennant, and this is a rising wedge. And this is a rising wedge. Now, the rising wedge from an uptrend, from a downtrend, sorry, we expect price to break out below, retest, and continue doing what? Selling. This is a continuation pattern. This is a continuation pattern. But the bullish pennant, take note of how the edge is closed and the rising wedge, how um how the edges is as well. All right. It's just a little bit of differences, but it makes a whole lot of change because this one has to break out to the upside. So you might actually see a bullish pennant and you're expecting it to break out to the upside, then you likely see it you might actually see a bullish pennant and you mistake it for a rising wedge, expecting it to break out below. Then maybe suddenly it decides to do a little bit of fake out before going up. Now that fake out is where you can get caught and price may actually burn you. So take note of the differences here. Next one, we have the bearish pennants. Bullish pennants, it's coming from an uptrend. Bearish pennants, price is coming from a downtrend. Then it starts forming the pennants. It starts forming the pennants. In this case, the opposite of this has to happen. You see the breakout below, retest, and price sells. So here we have, let's see the pennants. I don't know you all, please mute your mic. So this right here is the bearish pennants. This is what it looks like. A bearish pennant. And when you see it on from a downtrend, you expect price to break out below and continue doing what? And continue selling. This is a continuation pattern as well. So we also have the bullish this is the bullish rectangle that we've talked about. Rectangle. Now we have the bearish rectangle coming from a downtrend, of course, and price starts forming a rectangular consolidation right like this. What do we expect price to do? Break out below, retest, and continue selling. You see all these patterns, you see how easy they are. to spot it on the chart can be hard sometimes, but the only way you can start spotting it easily on the chart is when you start practicing it multiple times. It becomes easy for you to spot on the chart. And when you are able to spot these things on the chart, all you just have to do is open your charts, go to the time frame. Once you see it, you take your trade. If you don't see it, you leave the bearish rectangle. Now, these are some of the major continuation patterns that we have. Some of the major continuation patterns that we have. Now, there is another one. Okay, before we continue this, let's look into the live chart to try and see if we can spot a little live examples about on these particular things we've talked about for now. But before that, let me round it up with the bilateral patterns. Let me just round it up with the bilateral patterns, then we can start looking for examples. By bilateral patterns. Now, these are patterns that when they form, you have no idea if they are going to break out to the upside or downside. Unlike the bullish pennant, the falling wedge, the rising wedge, that you know that yes, so this should break out to the upside, to the downside. But this particular one, you have no idea if it is going to break out to the upside, if it is going to break out to the downside. The two major bilateral patterns that we have are, now you have to scrap, when you check that diagram I sent you, you're going to see something that looks like, what's it called? It's called the ascending triangle. All right. That ascending triangle is often taken for, what's it called? The bullish pennants, which is what I wanted to explain. Please mute your mic. The ascending triangle is often mistaken for the bullish pennant, which is what I want to explain. But guess what? They have a little differences. Now, the ascending triangle is the same exact pattern with the bullish pennants, right? Price is in an uptrend, but the difference between the ascending triangle and the bullish pennant is this. They have the same closure, the same upward slope, the closure, but this time around, the slope moves in an ascending form. The bullish pennant, when it is forming, it's forming in a descending form. Look, forming in a descending form like this, but the ascending pennant, the ascending triangle forms in an ascending form like this. Let me address this very, very well so you can see it clearly. So the ascending triangle forms in an ascending form like this. So it's just like, it's looking like the bullish pennants, but this time around it is ascending, something like that. This time around it is ascending. Now, when you see it like this, we call it the ascending triangle. That's an ascending. That is a triangle that is going up. Let me use that one. A triangle that is going up. So when you see it like this could either break out to the upside or to the downside. So in this case, price could either break out here, retest, and continue selling. Or price could either break out here, retests, and continue buying. So in this case, you wait for price to break out, retests. After the retest, still wait for a candlestick confirmation. Trust me. Don't just be like, it has broken out to the downside, let me just join. After the retest, even if you are not going to wait for a candlestick confirmation on the bullish pennant or rising wedge, you just want to go aggressive after the breakouts. You just want to sell from the retest, no problem. But when it comes to these bilateral patterns, I will always advise you wait for candlestick confirmation after the retest, because I've seen bilateral patterns do something like this multiple times. Yeah, it's going to break out to the downside. and you would think it wants to come back to retest. After breaking out to the downside, it will still go back up, break out to the upside, and continue going up. Yeah, this happens a lot with the bilateral patterns as well. So for you to be able to trade bilateral patterns with high risk to reward, always add that candlestick confirmations to it. It is very, very important. Always make sure you add candlestick confirmations to it. Very, very important. So you want to use your candlestick confirmation around this area. Your stop loss is going to be above here. So this is the ascending triangle. This is the ascending triangle. This is the ascending triangle. Now we have the descending triangle. By the name, you're supposed to know it is the opposite of this when the candlestick is what? When the triangle is what? Descending. In this case, we still don't know if price is going to break out to the upside or to the downside. In this case, when you see it like this, you don't know if price is going to break out to the downside or to the upside. So we like to wait for what? We like to wait to see that breakout. Then we add our candlestick what? We add our candlestick confirmation. We add our candlestick confirmation to it. We add our candlestick confirmation to it. So once you see the breakout, wait for a retest. If it's breaking out to this place, you wait for a retest. Probably once it breaks out on this place, and please, mind you, I hope you understand that these lines around these chart patterns are forms of support and resistance. These lines around these chart patterns are areas of support and resistance as well. Let me explain. This rising wedge now, this line above, preventing price from going up, is a resisting line. This one's below, preventing price from going down, making it form this pattern. This is the support below. The line above is the resistance. Same thing here. The line above is the resistance. This one here is the support. This is the resistance. This is the support. So in this ascending triangle, the line above is a resistance point. This one here is the support. Why am I explaining this? So that you'll be able to know the kind of candlestick confirmation you should be looking for. If price now breaks below, this support here has been preventing price from going lower before, has automatically been flipped to resistance. So when price is coming back to retest, you should be looking for a bearish reversal candlestick, because you need price to reverse, because from price to move from this point to retest is a bearish move. So you need price to do what? Reverse from that point and continue selling, because in your mind you want to sell. So you should be looking for a bearish reversal candlestick. This support has been flipped to resistance. So you should look for candlesticks that are very, very effective around resistance area, which are like the evening star, the hanging man, what else? Bearish engulfing candlesticks and all that. That's what you should be looking for. So all these lines are not just lines. They are areas of support and resistance. Support and resistance does not have to do with parallel lines like this here. This is the support line here. This is the resistance line here. This is support line, this is a resistance line. Any line or any area that prevents price from going upward is a resistance point. Any area that prevents price from going lower is a support level. It doesn't matter if it is a straight line or either a straight line or a line like this. All right. So this is a descending triangle. When we see price break out below, this support has automatically been flipped to resistance. I'll be looking for a bearish reversal candlestick around this area when it retests. A very strong bearish reversal candlestick, like what's it called? Is it the shooting star or the hanging man or the morning star? Sorry, the evening star. Bearish reversal candlestick. I find it. Next candle open, I'm entering my trade, putting my stop loss above this level here. My stop loss is just going to be like this. This is how my position is just going to be. It needs to be like this. Stop loss will just be above this level, and I'll target maybe the next area of support. my targets places maybe I measure from this point to this point to my price range to, I can target that area as well. It should be like 1 to 3 hour, 1 to 4 hour. Good trade. I move. Simple. Now, one thing again you should understand is these patterns are as effective as possible because they don't go away, they don't fade, they don't die. It's something that has been working for years, even before the invention of liquidity and whatever. It's something that has been working for years and it will keep working. So the next one we have the symmetrical triangle. Now the symmetrical triangle is neither descending or ascending. All right, the triangle is just facing this way. It's just like this. It could either be coming from an uptrend or a downtrend. Well, yeah, let me just use the uptrend, right? These are the symmetric triangle. Looks like the symmetrical triangle. When they say a triangle, it's not a wedge. A wedge has an open mouth. A triangle has to close. Remember, don't forget. This is like the symmetric. This is what the symmetric triangle looks like. The symmetrical triangle. So we have that, and we have this. As you can see, it is not descending, neither is it ascending. All right. In this case, the same logic is that is applicable to this ascending and descending triangle is also applicable to this one. This particular one, although they said it is a bilateral pattern, but over the years we've been able to hack it a little bit in the sense that the symmetrical triangle does this thing a lot. When I mean a lot, if you see 10 times, at least 8 times, this is what it is going to do. If it is in an uptrend, it will continue going up. If it is in a downtrend, it will continue going down. Although you can check this out before you use it. All right, it's still a bilateral pattern. It could actually decide to go up or go down. But I'm telling you that most times I've been able to spot a little pattern around this symmetrical triangle, and this is how it moves. If it wants to continue going up, you are going to see a breakout here, taking out all sellers. You still see price come back up. That thing I told you this pennant might do. You still see price come back up, retest, and continue buying. If it wants to sell, you will likely see it take out everybody above here, then come back down, retest, and continue doing what? Selling, like this. So the symmetrical triangle should not actually fool you, unlike this ascending and descending triangle. Sometimes when I say it, I just avoid it. Yeah. Or when I say that it has actually swept this up and it has come back down again, that's my best opportunity to enter because you will hardly see it go up, come back down, and go up again like this. Nah, you hardly see it do something like this. Once it has taken one side, you will likely see it go down to the opposite side, retest, and continue going to that direction. This is something that I've seen on the chart multiple times. Yeah. Let's go to the live chart and see how we can spot a few of this. The ones we can spot, we'll leave it for assignments so that you guys can get to work and see if you can identify some of it as well. So the live charts. So let's see. Okay, I wanted to show you guys something today on gold. I think I did not spot that thing earlier. A clear head and shoulders on gold. I'm still waiting for gold to do its thing. So let's see. Let me see. Sorry. The pair I'm actually looking for. Let me clear all this. Let's go down to like the 15 minutes. So let's start with some of the continuation patterns here. Coming from a downtrend, although I don't think price retested this wedge. Let's see. This wedge was not retested. Price did not retest it. This was supposed to be the retest, but it was not retested. Okay. This is good. This looks like a clear example of a bullish rectangle. This right here. I'm looking for an area. This is like a bullish rectangle here. It's like a bullish rectangle. I'm looking for an area that was clearly retested. Price data came back to retest it anyway. Here. Try to break out. Price data came back to retest it. This is a bullish rectangle. This is another one. I'm trying to see if I can find the pennant here. This is another pattern here. Although this pattern is not actually on this chart, it's called a megaphone pattern. I remember. It's called a megaphone pattern. This is how it's formed. A megaphone pattern is formed like this. It starts with a smaller body and it starts expanding. This is called a megaphone pattern. Start expanding like this. Okay. This is a megaphone pattern. If I'm not mistaken. This is a megaphone pattern. So this is another chart pattern. Okay, this was where the low started from. Connects this first and the second one. This is a falling wedge actually. This is a falling wedge. The falling wedge has a fake out. I like this example. I like this particular example. Why? Because when the consolidation started, after this point, our price went up and it starts going between these two prices. So we had the first move here. The price came back down to retest, went back up again to test. The pattern has already started forming. Now you have it at the back of your mind that if only we have to break to the upside, yeah, and you can see price consolidating downwards This area is now acting as a resistance point. This is now a support point. So consolidating down is giving you this kind of move. This is a clear falling wedge pattern. So we should be expecting price to break out to the upside and not to the downside. So this fake out here, if you're not careful, most of you would have thought that this is the breakout, and most of them would want to do what? Short the retest. And price faked out, reclaimed it, went back up to do what? Breakout and finally retested before buying. So when you see a falling wedge, like I said, falling wedge has to do with breaking out to the upside. So when you see breakout to the downside, do not engage. You just forget about it. Go and look for another opportunity. But you wait to see what price is going to do, because price might likely reclaim it. So that's a falling wedge pattern. Let me see. This is another pattern that has a fake out. What pattern is this? Let's draw from the top. This was the area that gave us that high, so we can actually start from here. Okay, another falling wedge. Another falling wedge pattern. I see price breakout retested, started buying. Let's see. Most of these patterns actually play out when you see them in line with the trend. I'm looking for, what about the rising wedge? Let me see if I can spot a good rising wedge pattern here. Let's see if I can spot a good rising wedge pattern here. I think this is another falling wedge again. This first two lows. What kind of pattern is this? Okay, this is called a channel. The same thing actually, the same logic. People just decided to form their own channel. Falling wedges, they are mostly the same thing. Okay, so I think I've seen what I'm looking for. Let's see. Is this a rising wedge? Yes, it is a rising wedge pattern. Now you see price from this point came down, back up, came down, and like I said, rising wedge, the mouth, it's going to look like it's getting narrower, but it's not going to be closed. When it's this, something like this or this, it's not like a rising wedge. That's a pennant. But the rising wedge, yeah. In this case, price was already reversing, but remember, rising wedge, when price is coming from a downtrend, it has to do what? It's a continuation pattern. So we expect price to do what? Expect price to break to the downside. As you can see, price break out to the downside, got to this level and reversed. But the fact that the rising wedge is a bearish pattern, have it at the back of your mind. It's a bearish pattern. Price will have to break out to the downside. That was even why price actually broke out to the downside, sold to this beginning, to the beginning of the wedge before going back up. So let's see another one. Okay. Let's see more examples. I think I'll see more examples on a pair that is actually bearish. If you see more example on a pair that is actually bearish. This looks like another one. Okay. The breakout. This is a channel, not a wedge. This particular one is a channel, but they have the same logic, which is why I did not talk about the channel or the flags. They have the same logic. When you see it, when you see a bearish channel like this, it breaks out to the downside, retest. So it has the same logic with the wedges. Which is why I did not talk about it. So there's no need for it to pack. the name of all the patterns in your head once you understand the logic behind them. This is another one, I think. Now, I think this is a symmetrical triangle. Let's see. This was the eye that started it. This was the eye that started it. This was the eye that started it. Yeah, this is a wedge as well. This is a wedge. And it's a rising wedge. No matter how small the rising is, the fact that it was trading upwards, the upward slope was there, it's a rising wedge. The breakout, the retest, the continuation. So let's see. Still looking for more of all these bilateral patterns, but I've not seen any yet. This is not anything. Only thing is, for me to actually get examples of these bilateral patterns, I have to go back to my journal, check the dates of trades I took using those patterns and the pairs, then I can be able to like get it. But I'm not able at home right now to be able to do that. I really need to show you guys some examples of bilateral patterns. In this case, some form of a wedge right here is forming. Let's see what pattern is forming here. So maybe we can actually use it for a live trade. Whatever pattern is forming here, since it's coming from a downtrend, I'm expecting price to break out in a downtrend. Looking at this, this is a wedge, a rising wedge forming on USD CHF. So what should we be expecting based on what we've thought so what we've learned so far? Should be expecting price to break out to the downside, retest, and sell. And this should be our target right here. Should be our target. In fact, let me put it, since we are learning and practicing at the same time, so that I'll make sure I'm not teaching rubbish. Now, when you go to your charts and you spot these things multiple times, we will know stop loss above the wedge here. So in your case, you can actually maybe check this particular target here. Simple, something like this. But before you place this, wait for this to actually break out. It has not broken out yet. Now you ask yourself, why is it that when it gets to the line, it is rejecting upward? Remember I told you, why is it rejecting around this line now? Now you might ask yourself, why did it rejected here? Good. Then price came back to this line, rejected, went back up, came back to this line, kept rejecting upward. This line is acting as a support level. This one is acting as a resistance level, resisting price from going higher, stopping price from going lower. All right. So now we're expecting price to break out from this point here. So when price breaks out from this point, we don't rush, we relax. Breakout, this is a fake out. Price broke out, rushed back in, and closed this above. Those people that did not wait for retest, all of them got burnt now. Because before price actually got to this point, I'm pretty sure your account has gone to zero. If you did not put stop loss, always advise to use stop loss anyway. So, I'm expecting price. Which pair is this? USD CHF. We're expecting price to break out and retest. Simple. So I think that is going to be a pending trade for now. That's going to be our pending trade for now. The rising wedge on USD CHF. Let's see how it goes. Assignment, please. Those ones we are unable to spot due to time. You guys should spot it. I don't have the time to start. Okay, on Friday we are doing the putting it all together of these chart patterns. So I'm pretty sure by then I'll be on my journal, so we can actually. I will not even be in Lagos, but it doesn't matter. On Friday, more examples on the live chats, and we talk about what we discuss about what we learned this week. But before then, let's see if you guys are actually catching up or getting along with whatever I'm teaching. So assignments, sports, two reversal patterns, and two continuation patterns. It's a very simple assignment. Two reversal chart patterns and two continuation chart patterns. So you are not just going to spot it and leave it like that. You spot this, on top of it, you tell me it's a rising wedge as a continuation pattern. Don't just tell me it's a rising wedge. You tell me it's a rising wedge as a continuation pattern, or you spot something else and you tell me, okay, this is a falling wedge, or this is a bearish rectangle, because this one right here is a bearish rectangle here. We're looking at this. This is a bearish rectangle. You see something like this, you tell me this is a bearish rectangle, and you give me what? An example. This is also a bearish rectangle here. And this is a falling wedge. Let's see if it is actually accurate. Okay, this one is nice. Looking at, sorry. This is a falling wedge. Price did not actually retest this one. So there are sometimes price will not retest your wedge. Or price will not going to retest your, what's it called? It's not going to retest after breaking out. Sometimes it happens. That is where you have missed entries. So the assignment is simple, yeah? Where is it? Where did I type the assignments now? So the simple assignments, spot two reversal pattern and two continuation pattern. That is just it. And after spotting two reversal and two continuation pattern, you on your own try and see if you can spot more chart patterns. Because the more time you spend on the charts, the easier you can actually spot these things and be able to trade with them. So the more you spot them, the more you build confidence around them. So when you see them, you can be able to risk your money on it and take a trade. So that is going to be all. That's going to be all. Now, while you are struggling, prepare your questions for Friday as well. I'll be using that Friday to answer most of your unanswered questions. So I'll be seeing you guys in the next session. Please do the assignment as you need because I'll be checking. See you guys later.